Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. The stock market remains volatile as investors seek economic clarity to determine the bottom for stock prices. This week, attention is focused on economic data and the Fed's decision amid tariff uncertainty. The S&P 500 and Nasdaq have corrected more than 10% from their peaks, while investors monitor the impact of Trump's policies on global trade. Upcoming economic data, including the U.S. retail sales report, will be crucial in assessing whether the economy remains resilient amid signs of weakness. The Fed is not expected to cut interest rates anytime soon, but Powell's statement after the March 19th meeting will be closely watched for future policy signals. After consolidating between the 45,000 resistance and 41,700 support for the past 4.5 months, the Dow Jones turned bearish following last week's support breakout. Wait for confirmation or consider selling in the yellow zone. Gold surpassed the $3,000 mark for the first time, driven by rising trade tensions, expectations of U.S. rate cuts, and strong demand as a safe haven asset. Spot gold reached a record high of $3,005. Analysts attribute this rally to geopolitical risks, stock market volatility, and strong central bank purchases. Experts predict that gold's momentum will continue, with forecasts reaching $3,300 this year and $3,050 in the first quarter of 2025. Meanwhile, the Federal Reserve is expected to keep interest rates unchanged in its upcoming meeting. After breaking the previous resistance at $2,950, gold surged to $3,000 per ounce. As expected, many institutions and major firms took profits at this psychological level. Look for buying opportunities on a dip back into the green zone. Tesla is set to extend its record-breaking 8-week losing streak, despite rebounding 4% on Friday. The stock has fallen over 4% last week and is down 38% in 2025. On Monday, Tesla suffered its worst session since 2020, plunging 15% after CEO Elon Musk admitted difficulties managing his businesses alongside President Trump's government efficiency initiative. Shares recovered slightly after Trump expressed support for Tesla, and Morgan Stanley advised investors to buy the stock following its steep decline. TSLA, on a daily basis, dropped 38% over 53 trading days, indicating a lack of investor confidence, with an average daily decline of 0.7%. A potential rebound from the 220 demand zone is expected, but the price is unlikely to surpass 300, which acts as dynamic resistance. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.